Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Tuesday, March 10th. Well, firstly, just taking a quick look at the S&P 500 today, following on from the discussion from yesterday. And yesterday we saw the formation of that small white body candle, and it suggested that the buyers were attempting to build upside momentum, and they did that. But if we compare that to the previous day's trading with that large black body, it certainly wasn't a good answer to the solid bearishness of the previous day's trading. We also saw the market finding resistance at the top of that highlighted yellow zone of previous support and resistance, and that did cause some concern and suggested potential for the market to continue selling. Now, with this candle, the switch in momentum away from the sellers of the previous day to the buyers, there still was a possibility of a change of trend. With the Tenkan-sen resistance close by, that certainly did limit the chance of the buyers changing that trend. And today we've seen the sellers continue in the market following on from the day prior to yesterday, with a candle very similar in size to the previous day's trading. The black body is even slightly larger than the previous day, so it suggests that the sellers have found that very, very strong net momentum to the downside once again. The sellers have closed with control of the market at the end of the day. They've been in control for the entire day by opening at the high, by opening at the high and closing at the low. And it suggests that the buyers have shown no strength throughout the trading day, so a very, very bearish candle. Very strong commitment from the sellers here today. Now, quite often what happens is that when we have these extreme type days, we tend to see the market want to have a rest or attempt to retrace that previous trend. So that is an opportunity, and combined with the market trading around the lows of that zone of support and resistance, and very close to the 2040 level that has been an important support level in the past, there is a possibility of some buying coming into the market. Now, we could see buying in terms of this very small candle, so the answer by the buyers might not be as strong as we'd like to see, with a good solid answer and the market testing up towards these highs. That could happen, but the important thing here is to watch these areas down around the 2040 level for any continued selling. If we do see selling continue in this market, the Ichimoku Cloud is just below that 2040 level, and it's a very thin cloud, and it means that the amount of support that we're going to get around the cloud is going to be quite minimal. It will be strong within this range between the top of the cloud is roughly about 2033 down to roughly about 2029, 2028. So there is potential for strong support between those areas, but the opportunity is there for the sellers if they're strong enough to breach that area, and they can change the trend in that longer term time frame if we close down below there. Now, what I'd like to see if we do close down below the Ichimoku Cloud is a strong bearish close down below there to give us a bit more faith in the breakout, and then some strong bearish follow through. And if we see that, we could see the market testing to the 2019 level, or even back down to the round number 2000. Importantly, in terms of Ichimoku, we're still trading down below the Tenkan-sen, and in a very strong bearish manner, and that Tenkan-sen is pointing down quite sharply, and that's reflecting the very strong downside momentum that we have now in that short-term time frame. And when we have strong downside momentum in the short-term time frame, if the market does bounce, the Tenkan-sen tends to hold as very strong resistance, and that's trading at 2080. So it actually strengthens the amount of resistance that we're likely to see around the top of this zone of support and resistance. Another issue here is the important bearish break of the Kijun-sen indicator, and that suggests that we have a bearish market in the medium term time frame as well as a short term time frame. and certainly does suggest that there may have been an important switch in sentiment in that medium-term time frame away from the buyers previously to the sellers. So what I'd like to see, however, is some good solid confirmation with the market breaching this 2040 level, and then even perhaps breaching down below the Ichimoku Cloud. Now, just looking at the bands here, and here we see confirmation of a very strong downtrend in the medium-term time frame. We saw the market break out just down below the bottom band in a bearish manner. We saw the market attempt to retrace that, close just within the bands, and then the strong follow-through here for today's trading with the sellers taking back control of the market. If we see the market rally, we're likely to find strong resistance coming in at the bottom band, trading at 2076 at the moment. And if we look at this candle closely, the bottom band has held as resistance at the high of today's trading, so it does suggest that that is a very, very important level if we are going to see buying coming in at that bottom band at 2076.28. Next, moving to gold futures, and here we see formation of a spinning top type candle, a candle of indecision at the end of this very strong first time frame downtrend. It does suggest that there is a possibility of a change of trend back to the upside, and it's all about the loss of momentum to the downside. And here we see this very large black body candle, the sellers strongly in control, strongly committed, taking out a couple of important areas of support, the 1185 area and the 1170 area. Today's trading follows on from the small black body of the previous day and another small black body here today, and that suggests that net momentum to the downside is certainly much smaller than it was on that large black body, and that's one of the main reasons why there is potential for a change of trend to the upside. The amount of momentum that the sellers are finding is not as great as it was previously. Now, that doesn't say anything about the strength of the buyers. It's all about the lack of strength of the sellers, or the reduction in the strength of the sellers. The other important issue here is the price rejection from the 1155 level of previous support, and we can see here previously that this important area acts as a zone extending down through the 1145 region, and we have had the market rallying off there quite strongly in the past. So that area down to 1145 is going to be very, very important support. The other issue is the downside price rejection from 1170, and that's what makes this candle very indecisive. That we've had the buyers losing commitment at 1170, but we've had the sellers losing commitment at 1155. So what we're going to do is look for confirmation of a change of trend to the upside. If that does occur, the market will need to breach that 1170 area and form a higher high and higher low. Now, we could also see the trend continue down, so it makes the area just below 1155 very important. Importantly here, however, is the trend in all three time frames is down. We have the market trading below the cloud, the Kijun-sen, the pink line, and the Tengen-sen, the green line, so we have a negative market in all three time frames, and that suggests that if the market does rally, we'll see the market retrace to a percentage of this, potentially to a percentage of this downtrend, and then see the sellers come back into the market. If the market does rally through 1170, we have potential resistance at 1185, and then potentially strong resistance at the Tengen-sen, roughly about 1188. Moving next to the Euro US dollar, and here we've seen very, very strong selling coming into this market once again. If we look at the character of these candles in this downtrend, following the breakout down below that type of symmetrical triangle, the close down below in a bearish manner, we saw this indecisive, very small body trading around the 111.60 area, and then the sellers breaching that area in a bearish manner. Then the day after, indecisive spinning top type candle, a reduction in the size of the black body. Then the sellers coming into the market strongly once again, breaching the 109.02 level. The day following that, we had another small bodied candle. So the net progress, it becomes very large. We have these extreme type days, and then we have a reduction in the day or two after for at least one or more days. Today we've seen a continuation of that pattern with the sellers coming into the market strongly, Very strong net momentum, and a breach down below the important support level at 107.60. The market has closed in a strongly bearish manner, strong commitment from the sellers, and this suggests that there is good potential for the market to continue trending down. Now, if the market does follow that pattern previously, we may not see another black body candle here for this candle. We could actually see the market test up to this 107.60 level and see that hold as resistance, as we saw here previously with the 109.02 level holding as resistance. So we'll be watching that area very closely. Now, that doesn't mean that we won't get a black body candle. So what we need to do is watch how the market approaches down through this current low, and if we see strong bearish activity down through there, and we haven't seen that yet, but if the sellers do come back into the market, we could see an extension of this very strong trend to the downside. In terms of trend, a very strong bearish market in all three timeframes, trading below each of the Ichimoku indicators, and the Chica span here is well below the corresponding price action. The depth of the price action away from the Ichimoku Cloud is not too extreme, so it doesn't suggest that the market is strongly oversold yet, but if we do see the market attempt to rally and we trade through 107.60, obviously the area around 109.02 may hold as strong resistance, but also the area just above there at the Tenkan Sen trading at 109.56 should hold as very strong resistance for the Euro US dollar. And just quickly looking at our long-term monthly chart here with the Euro US dollar, and we have the market trading within something of a trend channel. And here we have the trend line drawn and the line parallel through the troughs that describe that trend and that trend line, and the market will be interacting very soon with the bottom of the channel, at the moment down around 105.88. so that's something to bear in mind, that we could see the market attempt to bounce off there, and that channel has been tested twice in the past, so that could be a very, very important level. Also, the thing to watch is just below there, down around the 103 area roughly, is this major trend line that describes this trend from this peak, the trough, the higher peak, higher trough, and then the higher peak when the 145 area was taken out. So very, very long-term trend here, and any breach of that will signify that the trend could be in trouble. The momentum to the upside is no longer in the market in very, very big picture terms.